Hello friends, how are you? So we have been seeing different topics. Now under cash management, I just want to touch upon the cash cycle. Cash cycle. So length of cash cycle. So every business faces the same problem. Cash cycle, highly very lengthy cash cycle. What is cash cycle? What is cash? Cash cycle, length of cash cycle is the time passed between payment made to the suppliers first and the amount received from the customers. Okay, so the payment, the time lag between the payment made to the suppliers and the receipt amount received from the customers. There is a time gap. There's a time gap. So our aim is to reduce the time gap. Our aim is to reduce the time gap. Suppose it takes 120 days. Supposing you reduce it to 60 days, then for the 60th day you will get the cash. Then you can spend it on your production. You can pay to the bank. Interest will be reduced. Otherwise, unnecessarily you will be paying interest, and you will not be able to cater to the requirements of the business. Supposing now if a customer comes and places a huge order, where will you go for cash? You unnecessarily have to borrow, and which increases your cost. Supposing your length is reduced and you are getting a cash, you can do it. You can use it without borrowing. And even if you borrowed, you can pay to the bank and the interest cost will be reduced. And you can again draw from the bank and enhance your production, buy stocks to meet the increased demand. So this is very important. So cash cycle is very important. So always you should try to reduce the length of cash cycle. Okay. So I already told you what is cash cycle. Cash cycle is nothing but the time passed in between the payment made to the suppliers and the amount received from the customers. Okay. So you have to be very careful. So our aim is to reduce the length of cash cycle because the cash will be released. Because if you reduce, supposing it takes 120 days, supposing you are reduced to 80 days, at 40 days you are getting it on 80th day, then 40 days you need not pay interest because the moment it comes, you go to the bank and give it a credit to the bank account, OD account, cash credit account. The interest will stop running from 40th days. For 40 days, interest will stop running because you already credited, you brought to the credit balance, and interest you need not pay for 40 days. You understand that? Then again you draw from the bank, to the extent you want and buy the materials. Supposing some customer comes and pays earlier, then again, supposing a customer places huge orders, then immediately you can go and purchase goods and you can start producing, you can start selling also, buying and selling. So, as I already told you, business fail not because of profit. Business failed because of lack of cash. Try to understand. Already I told in some of the sessions. That's why I'm taking exhaustively this session. So let us analyze then what we can do about to reduce the length of the cash cycle. Okay. So try to understand me. Follow with me closely. And tell your friends what I've been teaching you, and subscribe to my channel also. Please, that will be a motivating factor for me because you're all watching in the my channel, but you're not subscribing. Please try to subscribe because SPC Academy, Small Business Champion Academy, with the motive start small, grow big. Okay, that's why I'm attending even the smallest thing. So let us say in this case, the already told you cash cycle, the time lag between payment to suppliers and receipt from the customers. Okay. So let us see now in this case for order goods, you are ordering goods, day one. Okay, ordering goods. On 40th day, all goods have come. So you issued a bank check. Okay, issued a bank check. So this is over. So from bank it starts. Because money you have to pay to the bank, not to the supplier, because you already borrowed and you got the limit. So you issued a check to the supplier. So 40 days it took days. So 40 days starts. So okay, then the bank, supplier will not be in the picture because you have paid him by issuing check. But thing is, you have to pay to the bank. You have to pay to the bank. So now we are selling the goods. You are selling goods on 218th day. So 280 days. So gap in between is 178 days. That is turnover, stock turnover. Don't break your head. You're nothing big about it. So 178 is almost roughly stock turnover. So 2 times the stock is turned over in India. 178 days into 2, almost 360. So 350. So 2 times stock turned over, let us say. Now it is 218th day, you are selling the goods. And selling the goods, because you receive the orders, then you want to sell the goods. You are sold in principle, you are sold. And you are delivering on 230th day. 230th day, you are delivering it. Okay, 230th day, you are delivering it. And customer pays on 280th day. Customer is paying on 280th day. So what is the average collection period? 50 days. The collection period is 50 days. You understand? So in this case, so from 40th day onwards to 280 days will be your cash cycle. So 280 divided by 40, but 40 days over. From 40 to 41st day counts from the bank. Okay. So customer is paying 280th day. So 248, 280 divided by minus 40 is 240 days. 240 days is a cash cycle. This is nothing but a cycle, you understand. This is only an example I have given them. Cycle you understand. 240 days. So how to tackle? My challenge is how to reduce the length of cash cycle so that you will have you be flushed with the funds to focus more on the products, focus more on the more sales, and you reduce the borrowing cost also. That is my intention. Okay. So now how we can do it? Suppose daily, for customers, some business people, what they are asking daily report. Daily report. If it's a little big concern, you can ask, accountant you can keep, and you ask for the daily report. What the daily report consists of? Summary of the day's sales, that particular day's sales, summary of day's cash receipt, how much cash you received per the particular day, and how many summary of the day's cash, how much cash you disbursed. Okay, then summary of receivables collections, how much you received from your customers. So these four. So these four will enable you to forecast the future cash requirements. So you can put plus and minus, whether deficit or plus, how much you'll be getting it. So you will have form an idea. So again selling summary of the day's sales, summary of the day's cash receipts. This means cash sales. Okay, summary of the day's cash receipts. Then summary of cash receipts will come, other by discount, other cash discount also will come. So not only sales receipt you are coming, you will have some other receipts, rent, other income also will be coming. You will be also, that's also you can take it as a receipt. Then summary of you supposing you have some dividend, some you have a rent receipts, it will also come. So there's nothing wrong in that. Then summary of today's cash disbursement, how much you paid to EB, how much you paid to labor, how much wages you paid, how much you paid for the raw material suppliers, etc. Then what is the collection, how much your collection from your customers. So credit sales, cash sales, credit sales, all these things. This summary, if you put, you will have and form an idea, basis for cash, how much cash will be required in future, tomorrow, next week, how much. So that you can know, because your pattern is, you are analyzing the pattern, how the inflow, outflow is taking place. So you form a pattern so that you can assess the items. Okay. So again, cash and profit are not the same. So one cannot depend on the profit. Profit is, it's an accrued basis. Cash is the cash flow. Cash flow is actual cash flow. Actual cash flowing inside, outside, outflow. Profit is not that. Profit will be lying in the stocks. Profit will be lying in the receivables. Okay. Profit will lying in the computers. Now all these things will not come immediately cash. Cash will not be there. But profit may be there, cash will not be there because it takes time. The stock is, profit is in the stock, profit is already sold. So already stock is lying there. Only when you sell, cash profit also comes. When you cash sales, immediately profit comes. If it's a credit sales, then it will be profit is lying in receivables, your debtors, your customers. So your profit and cash are not the same. Try to understand. So you cannot cash flow based on I will get this profit, so I will use that, I will manage this. No, you cannot plan based on the profit. You got to plan based on the actual cash flow. Got the point? So you try to understand this. So cash flow is actual cash flow, liquidity. So how much cash is available, how much I can pay the EB bill, how much I can pay the wages, how much I can pay the suppliers, how much I can pay to the GST, and all these things will come because of cash flow. So you should understand. So there are five roles a customer has to pay so that the cash cycle can be reduced. Five roles. Five roles a cash manager has to see. First, cash finder. Cash finder means you should have enough capital. You must ensure that at least enough capital, enough cash is available so that it is ongoing business. So daily he has to make calculations. He has to find out where's the sources, who can give, where immediately I can rush back in case of a shortages, how bank credit how much is full, whether it is can avail OD like that. All the things he should find. So it's finder means it's not that he's finding a cash. He must have ready resources available so that cash shortage can be overcome and enough capital. So in bank, you have got unutilized limited, this much is there, and excess you have got sanctioned. So in case of any emergency, temporary OD can be availed, then they can manage the cash. So okay, very important. Second is cash planner. So you must forecast what are the inflows, outflows with the help of cash budget. Already, I think I covered in the cash budget. So how much cash will be coming in, how much cash shortage will be going in, how much you are going to make with the loss. So all the things you must forecast inflows, outflows with the help of cash budget. Always you should keep track of payments. When the bill is due, when you have to pay, when your EB is to be paid, when GST is to be paid, when your IT is to be paid. All these things you have to make planning so that the business doesn't suffer a great setback because they don't have cash because they suffered a loss. They should not be there. So you should forecast what is the thing. Then cash distributor. So you should control the cash payments, disbursements. So you should have priority. Which is more urgent, you should try to concentrate. Which is less urgent, you can postpone it. So timing, so very important. You can go on distributing just like the cinema notice. So you have to take care, control, pricing and forecasting is very important. You should try to forecast it so that disbursement done in order, in time, according to order of priority and timing. Okay, very important. Then cash collector. So you should uncollected accounts. Uncollected accounts, if you're not following the accounts, then that is the end of it. It will drain on your cash. Finished. So uncollected accounts, you have to be very careful. You should appoint somebody who can follow the accounts receivable, debtors, and follow and so that you can go and collect the cash and remind the people that your account is become due at such a date. Please send the cash. You can offer the cash discount, other things, and it'll be okay, fine. Then cash conserver. Cash conserver means unnecessary expenditure we should avoid. Thereby cash can be conserved, preserved. Unnecessary expenditure. About unnecessary expenditure, then maximum whatever the money you are spending, you should give in return. Stock you want to buy, you should give a return to us, to the business. You want to spend on computer, you should return by way of income to the business. You should, how it can be done? It will improve the efficiency. It can improve in quicker disposal of the orders, thereby winning the customers and winning the sales and winning the profits and so on. So 5 things are there: cash finder, cash planner, cash distributor, cash collector, cash conserver. Okay, so this is the thing. If you follow it, and cash cycle can be reduced, and you can be successful in your business. So, friends, all the best. Take care. Thank you. Thank you.